Hi and welcome to the Market Alert for Thursday, the 8th of August 2024. So stocks puke back overnight, dovish Bank of Japan gains, bond yields and black gold rise. And US stocks reversed opening strength amid weak earnings and geopolitical fears. So let's have a look at that, but just before we do, let's have a look at today's economic news. Unemployment claims, weekly one from the US out at 1:30, and then another bond auction at 6:01. So again, no major economic news items to be released for today. Right, let's have a look at the Dow and see what it did during yesterday. So yesterday the Dow, it opened quite strong, traded up, and then was hit, as you'll see in just a second when we look at the 30-minute chart. The daily chart is still oversold, but the market's not making much progress to the upside. However, prices have retested the 200 MA on the overnight there. So look at this in a bit more detail. So yesterday the electronic Dow moving up nicely until the cash market opened, and then it was a case of let's get out of the trades. And that's not uncommon. What they do is use the futures to bring the market up, gives them a higher selling price when the cash market opens. So the cash market certainly dominating. It looks like there's still some sort of fear there. Again, overnight, the market moving higher on the futures, dragging the market up. But it'll be interesting to see if we get a similar picture to what we saw yesterday when the cash market opens at 2:30. If we do, then we know that people are offloading their positions. In the German DAX, the market sideways. A similar picture in the daily chart as well. The market had strength and then it lost all of its strength, but overnight the market still finding support at 17,400 level, which is way over to the left there. So currently holding, and in the 30-minute chart we've got prices moving to the upside through the 200 MA, but then being dragged back down with the Dow, as can be seen there, all the way back down to a new low overnight there at 17,250. When I say new low, I mean intraday low. The market moving back up at the moment. It's got the 200 MA in the way, but it knows what happened last time it got to 200 MA, so just watch this area. If prices manage to get above this, it will have to take out the psychological levels, the R1 and the high, and of course the psychological level that actually precedes the high. But the 30-minute chart is currently overbought, so we could get a bit of a pullback there. But watch the DP as well for strength, and the 20 bar moving average as well. In the S&P 500, the market also finding support at the 200 MA. Yesterday, exactly the same picture. The market was brought up in the electronic session, and then when the cash market opened at Tuesday's high, the market then moved lower, as you can see there, and also down to yesterday's low on the overnight, just managing to make its way back now, just sitting above the close. And the 200 MA, we've got the DP here and also the 50 EMA as resistance for this market should it move higher. In the FT100, prices are also sideways there as well, but overnight, unlike the US markets, the current bar hasn't actually traded down to the previous day's low, which we can see in here. There's the yesterday's low. The market came down overnight but just stayed at the psychological level there of 8,050 is where this psychological level is there. So still above the 8,000. Again, the same as the other markets, up in the pre-market and, well, pre-market US, dragging the European markets higher. And then all the way down with the cash Dow as prices sold off. Overnight, above the DP at the moment, but it needs to take out the 200 MA there as well. But it has got support at yesterday's close as well. In the US dollar, yesterday this was back down. Didn't help silver or the other metals. Up on the overnight though, so consolidating that huge volume from Monday, still holding prices. If we take out the low of the US dollar, then there's a good chance of seeing this continue to the downside. But at the moment, that's certainly set a benchmark for the dollar to actually sit on, because as you can see, that volume is absolutely massive. So they didn't want the price below this area here, which was 101,774. So in the metals, silver down to the 200 MA again, trying to move back up on the overnight. I'm still looking at $26 for this market to move down to. It's quite possible to do that with some news. Yesterday down, up, and then selling off sharply, as you can see there, coming down with the Dow. And then overnight prices have rallied in the Far East and above all of the averages at the moment. So it's quite optimistic there. But it's the London fix, isn't it? That's what does it. When we get to lunchtime and just after when the Dow opens, we get the sell-off. It's the same the day before and the day before that. Gold sideways to higher, holding well, a lot stronger than the silver market, which you can see there. Despite being pushed down with the cash Dow, you can see the market's retraced quite nicely there, at least 50% of its move. Let's have a look at the gold-silver ratio. And in the gold-silver ratio, we've hit the 90. We're still going higher. We've got 92 is the target for this market. If I just scrunch up the chart there, you'll see where we're sort of going to be heading. A lot of resistance there. And if we take out 92, then goodness knows what will happen to the price of silver. But at the moment, that's the target for this market. But it's got to take out the 26. So we might just be at a bottom in this market looking at this, because it is, like I say, if we scrunch the chart up and go all the way back to March, it's started to make lower highs after it did this. So we may be just at this sort of area there at 90 where we could see a reversal in this. It takes some doing though. It'll take some doing, because at the moment the shorts are certainly in charge of the market. Right, let's have a look at yesterday's trades. So the market kicked off and traded lower straight off in the futures, and then started to make its way back. As we kicked off in the cash market, the market was really quiet, but eventually broke, as you'll see in just a moment, to the downside there. Just a quick trade, and then back up, and then moving up quite strongly. So it was a case of shake everybody out and then bring the market back. Unfortunately, because of the volatility in this bar, we didn't get a signal, which is a shame, because the market moved up. Stopped at the 200 MA, as you can see there, and then pulled back a bit before having another go, this time managing to successfully get through the 200 MA and the R1 briefly before prices found some profit taking. We then went sideways with a potential sell signal, which wasn't filled, and as a second one there, that wasn't filled either. And then prices back to retest and then continue on through with that strength all the way through to 230, back to the previous day's high, which you can see there, and then through it as well. We then get into the afternoon. The Dow opens, trades higher, so does the DAX, and then eventually we see the Dow move lower, and we start to see a failed trade there, and then we get another bounce to the upside with a more successful trade there as his last sort of bounce. And then of course the US, as we saw the cash market selling off, and this dragging the market back to the downside. So let's have a look, see where we are overnight, and in the daily chart there, we're still moving to the upside. In the 2-minute German DAX, you can see there that we've got the low, the close, the 200 MA has certainly been supportive of prices there. Got the DP as well. We're in the right range for the averages, apart from the 20 bar, which needs to get back above the 50 there. Just make it bigger so you can see it. So the 20 needs to get back above to maintain the impetus to the upside. But how far away are we from yesterday's high? At the moment we're 150 to here, and so about 175 points to the high of yesterday. A lot closer to the, obviously the DP, the 200 MA, and the close at the moment, but the same distance down to the low. Again, if we just have a look, we've got 100 points there, 150. Actually, we've got more to the low. We've got 225, so it's a lot closer run to yesterday's high. So there we go. Let's see what happens. They tried to bring the markets back yesterday, but the cash market, and like I said earlier, no surprise really. One thing that never used to happen, of course, when we had no overnight trading way back in the early days, you just had to take whatever was on the table. But now they can use derivatives to bring the market up in the pre-market, So it gets traders, particularly fund managers, a better price when they open the cash market. The prices have already been brought up, so they can then sell into it, which is why you see the Dow do what it did yesterday. And if we're heading for a recession, then of course that's going to play into the hands of those who wish to offload at a decent price. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next.